Guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 8th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. The information provided is for your benefit to use as you see fit. Please do your own due diligence. It's your money. It's your responsibility. Okay. So, I've been talking about this open AI, chat GPT, uh, the whole AI bubble. I think it's a bubble. It doesn't mean it's not going to be useful, but I thought it was interesting this week that some officer inside of open AI said that they were looking for a government bailout or backing, forget the terms they use. And then the CEO of it came out and said, no, 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 we're not looking for that. Bottom line is these things don't make money. Hundreds of billions, if not trillions of dollars are being invested in this technology, and the revenue so far is not sufficient to support that. We've went over that before. So it's kind of a kamikaze mission based on what some of the CEOs I've heard them say. They feel that they have to be involved with this because this is the next new thing. And the risk is that, okay, if we're not involved and it takes off, then we're cooked. But also, I don't know if they realize that if they can't generate revenue, they're cooked. The revenue generation model for Google and Facebook and all these, things like that is ads. And the advertising revenue is not sufficient to cover the investments that have been made in this. So how does this make money? I don't think people have figured that out yet. This is why I think that the initial investment will probably be unproductive, kind of like when we laid all that fiber during the tech bubble. It wasn't originally utilized, but over time, as the original pioneers that rode off to conquer the new world of the internet basically got arrows in their back and were knocked off. Uh, Again, the ideas, the assets, it doesn't go away. It just gets redistributed to others at fire sale prices, and then we see what's happened in the last 25 years as the internet and telecommunications has expanded. So, unfortunately, I think that a lot of the people that are on the forefront of this and spending a lot of money are probably not going to be the ones on the other end that end up having the best results. So my thing has always been my view on this is just stay away from it. I have no particular expertise. It's not possible to understand who's going to come out ahead. It's just another bubble. It exhibits all the bubble of you know, of previous bubbles. So that's fine. If you choose to play there, that's your business. It's not for me. But you can see how quickly this has, I think in 2020, Microsoft invested 1 billion, and in 5 years we're up to 500 billion. So this is obviously one of the um, you know, quickest moving industries for adoption and investment that we've seen. But I think it's the most overhyped sector in history. So because I think that going forward, at least in the Western world, we're going to be in a period of sustained inflation slash stagflation due to the indebtedness of the West and how that's going to have to be approached, probably culminating in a new monetary system. I don't know exactly how that's going to come together or when, but previous periods of this, like when we went off the gold standard in the early 70s, and prior to that, when we tried to run the guns and butter uh, great society programs in the Vietnam War at the same time, we were in a inflationary, stagflationary environment for over a decade. I think something similar can happen. I don't think it will be exactly the same, but obviously with the debt that we have and the way we're piling on debt, um, ultimately there's only one solution, and that is inflation. And so we have to prepare ourselves for what, we could get into all the reasons why. We've talked about it ad nauseum. I write about it in my newsletter. And so if you accept that we're going to have inflation over time, then what benefits from inflation? And so we go back to the previous period when we had a similar situation where we had a change in the monetary system, when we had inflation, stagflation, a lot of debt, and what did well. And so, gold, for example, I'll put this uh, on the Facebook Actionable Intelligence Alert Facebook group so you can review it. But oil did well, up 900%. Broad commodities, REITs did fairly well, 200 to 300%, and but individual stocks, it just depends, struggled. Energy stocks did well. This is kind of what I'm expecting. For example, Exxon was up 500 to 800% during this period. I'm not saying it's going to go up 800% this time, but I do think it's going to be a multi-bagger. Um, so I think that companies that can raise their dividend, that can raise prices, um, nominal growth is what's going to something you have to watch. And as inflation comes, you've already seen it. You've seen candy bars shrink and the price go up. It's all across, a Reese's now is about as big as a quarter. It's kind of humorous to me, but this is what we're going to see more of this, right? And so what benefits? It's not going to be fixed. It's interesting when we'll talk more about it here in a minute. At the recent election, people are talking about the cost of living. People don't understand. It's funny. One thing I want to point out, not one discussion, not one, I couldn't find one iota of um, discussion around Federal Reserve as being the engine of this and the government itself being the engine. You have reached a new price level. You don't see deflation or disinflation. Like prices are going to come back down to pre-COVID prices. That's not going to happen, folks. That's not how this works. You had a party, you had pandemic, free money was given, prices went up. They're not going to come back down. Here and there they will, but overall they won't. Your cost of livings went up and your wages haven't. The government caused that. The Federal Reserve causes that. There's no discussion about that. It's all about, well, you know, it's just misinformed and it's deliberate, right? Because the establishment, the media is part of that to run cover. They're not going to say, well, if the government wouldn't have, spent all this money, we wouldn't have locked the economy down, uh, you know. And contrary to what people think, it probably wasn't necessary in retrospect. It didn't really change things. All it did was cause, and then of course the reaction to the shutdown, giving free money out. And of course, prices went up. Now prices are not going to come back down. And so people, this again, I talk about this all the time, but people can't get it through their heads, evidently. The government causes most of these problems and then gives you a solution for a band-aid on top of a band-aid on top of a band-aid. But nobody does anything about the underlying sore. So, anyways, you're going to have more inflation. You're going to have a lower standard of living if you don't know what's going on. It doesn't matter who you elect. These re recycled, retreaded ideas are not going to work unless you get control of the entire country and create a, communist state to grab the wealth. But we're a long way from that. But these things don't work. And the things that do work, no one talks about. No one talks about getting rid of the Federal Reserve. No one talks about why the government has to be involved in everything. Um, part of the shutdown is because of the extra benefits that were given during the pandemic that the Democrats want to continue to fund now. But we know that a lot of this is going to, people don't even know what's really going on. The bottom line is we don't have the money, and you're not going to wish money and wealth into and prosperity. There's certain things you have to put policies in effect. We have laboratories around the world of countries that have engaged in putting proper policies in place, which result in economic growth. And we have countries that put policies into effect, and we have the historical narrative is clear, is unambiguous, that the more statist that you get, the less prosperity you have. But I guess we're going to go through this again. But anyways, getting back to what's actionable, this is what's actionable. This is what's going to do well over the next decade plus. Okay. You have the ability to, this is going to become a more and more bifurcated society, the haves and have nots. It doesn't matter who you elect, that's going to happen because the policies that are being advocated for are not going to work. They're going to exacerbate the problem. And so it's going to be more inflationary, more debt. You're going to have a monetary reset at some point. Probably it's going to result in the dissolution of the United States as an intact political entity. But these are things to talk about down the line. These are all, esoteric, philosophical. This is actionable in my view. This is what we are focusing on. And of course, emerging markets, places where the demographic, the policies are being shifted away from the left to the right to more market friendly. That's what we're focused on. This was interesting. It came out. This is just evidently I didn't read the whole 5,000 word dissertation that Bill Gates wrote. I'm going to do it this weekend, but this is just the three things that were extracted just from somebody that I was reading their synopsis of Bill Gates's. I don't want to say he refuted climate change, but he's kind of backed off from the climate zealotry. Um, he dials it back on climate change, and so this is kind of what he's saying. I'll put a link to the essay. You can read it. And of course, the media and the climate change nuts went nuts when they saw this, which I find interesting. But again, we're already a few years past peak ESG and peak climate change and all that. It doesn't work, and so there's going to be some hanger-ons in some countries. I think the UK, they were at this thing down in Brazil, and only one other country signed on with them to lower. People want to be prosperous. They don't want to be poor and cold. It's just like we said all along. And so it's fun to say, you can go out to the suburban mom and with her two little kids coming out of the grocery store on a Wednesday afternoon with your clipboard. Are you for climate change? For fixing climate change, man? Oh, absolutely. As she rubs the heads of her little toddlers, I care about my kids. Well, do you want to have your standard of living go down by 10, 20, 30%? Well, what do you mean? Well, that's what it's going to cost. Well, then they're not interested. They have shown polls where people weren't even willing to spend $10 a week to fix climate change. And I say that with italics. So again, uh, people don't want any kind of pain for any kind of gain. And so this is what Gates basically was saying, based on one person that read it. I'll read it myself this weekend. I didn't have time for this. I just saw this, but I think this is major because he was one of the main instigators of this. A lot of his money was going into this, funding this nonsense. So climate change is a serious problem, but it will not be the end of civilization. Yes, climate change exists. I agree. I don't think man has that much to do with it. It's the natural order of things. The climate changes over time. That's in the geological record. And again, it won't be the end of civilization. He goes on to say, temperature is not the best way to measure our progress on climate. Well, that's interesting. And then third, health and prosperity are the best defense against climate change. So this is really like throwing a brick through the window of the climate change cult because this is exactly what they don't believe. They believe temperature is the best way to measure progress. Of course, you can't really control the climate by turning the CO2 knob. They know that, but that's not what this is about. This is about control and getting free money and power that you don't deserve. That's what all of these things are about. Always, all the time. Free money and power for the people that can't create any wealth on their own. Empathy, okay, or envy disguised as empathy or concern, okay? These are not good people. They just want something for nothing. Even people that are PhDs, they want their grants, they want prestige. They could get it. Well, we're past that now. Peak ESG. Get it? Because the global South and East aren't buying it, never did buy it. They want to be prosperous. Back to what the energy minister of India said. I have one, yes, we're going to continue to buy Russian oil. Why? Because I have 1.4 billion consumers here, and my responsibility is to get them the cheapest energy possible. It's insane. People mouth platitudes. China's been mouthing platitudes about climate change for 30 years as they've taken over industry after industry and burning more coal than anybody. Okay. People in the West, again, uh, bought it hook, line, and sinker. So people like to laugh at, I don't laugh at Berkshire, at Warren Buffett. They have record cash reserves right now. I think they're going to be vindicated. Eventually, we're going to have a significant market pullback, and Buffett will be there, or whoever's managing Berkshire will be there as usual to buy up things on the cheap and bail companies out and get warrants and get all these special deals. This is kind of like if you read the book about Hetty Green, who was the Witch of Wall Street, the wealthiest woman in the early part of the 20th century, this is what she did. She sat back, clipped coupons. She used to have a desk at the Bank of New York, right in the middle of the bank, her little, wasn't an office. She'd sit there at her desk and you got to clip bond coupons, clip her coupons, and people would come to her and say, "Hey, I need money for this. I'll sell you this building, or I'll do the, distressed assets." And that's kind of how Berkshire has created wealth. They don't buy overvalued assets. Okay. They buy undervalued assets. Now, they have so much money now that they need big, big transactions. So they can't do the things that we can do at our level. There's still plenty of value out there if you look around the world, but you can't take advantage of it or move the needle with 382 billion. I read the article again. Maybe I'll put it on the weekly email that I send out, Actionable Intelligence Alert, free weekly email. But Buffett has been asked several times, and he's talked about this at the Berkshire meeting. If he was just running $1 million, he said I remember he said, yes, I could get 50% plus returns. And then he, kind of paused the one time and then said, no, I know I could do it. I guarantee I could do it. And you can get really good returns. What does he say to do? Okay, where are the cheap markets? Okay, that I'm looking at. Okay, I told you about my basket of Japanese net nets. That's actually done very, very well. I collect these things like baseball cards. Okay, companies that have tremendous amount of cash, security, whatever on their balance sheet. And what was the catalyst? Well, the rule changes of the Tokyo Stock Exchange and the Ministry of Finance forcing these companies or shaming them into um, shareholder returns. That's one example. Go through the whole entire UK stock market, A to Z, look for values because eventually you're going to have a change in government there. Okay, look at the values that are maybe in Norway, the dividends that are being paid by some of these companies there, double digit dividends. Okay, got to go through this stuff individually. But if you have 382 billion, you can't really mess around with this because it doesn't move the needle. You need big multi-billion dollar transactions. And so you only get that when you have a market disruption or a big drop in the market. So right now he's getting his 3.8% in T-bills on $380 billion, which is about, I don't know, 16 billion a year. Okay, that's just accumulating plus dividends, right, from stocks that were bought, years ago. He's getting more in dividends from Coca-Cola than they originally paid for the stock that they bought each year. So there's something to be said about this. People like to make fun of this. Everybody's a genius because they, are on this bubble train. Again, I go back to we don't judge people on their 3 or 6 or 1 year performance. Can you have consistent performance of beating the S&P over many years and several market cycles? That's the real indicator if you know what you're doing. Anybody can get lucky. Again, in a poker game, you could be dealt best hand to start and hold them the pair of aces. That doesn't mean you're going to win every single hand that you get aces. If you play it correctly over time, you will be profitable. But somebody could get lucky on any individual hand and beat you. If you walk down the street and find a, $10,000 diamond ring sitting in the gutter and you pick it up and sell it, does that make you a good investor? No, you just got lucky. And so a lot of this is luck. A lot of this is people confusing being in a bull market with genius. This happens all the time. We've talked about this before. So this should be telling people something, but obviously it's not. You'll see people in the comments will say, well, this guy's 97. He doesn't know what he's doing. Yeah, he's outperformed over time, all of you. You couldn't beat the market if you had to deal with the level of cash that these folks have to invest. But you can if you got deep dive and you can find companies that are very cheap at small market caps that these people can't play in. So I wanted to talk about this. We just had the recent election. It's kind of funny to me, especially in New York. Um, I'm not really going to sit there and rag on these people. I mean, it is what it is. It's just a choice they made for whatever reason. I have my views, but I just want to point out that it's the Tax Foundation State Tax Competitive Index. For the new mayor of New York City, he can't just do whatever he wants. It's just a city. Okay. He actually has to go to the state legislature in Albany now and pressure the governor and the legislature to allow him to raise the taxes that he's saying for the revenue that he thinks he's going to get. What they don't seem to realize, and we've pointed out over the years here, this whether it's been in Oregon or Washington or Illinois, when you raise taxes to a certain threshold, people start making economic calculations and start California, they start leaving the state. Okay. People at the city and state level don't have, because we have a federal system, don't have the ability to lock you in like in East Berlin. Okay. And whether it's a actual physical wall or a regulatory wall, you just pick up your wealth and leave. And that's what will happen. Um, I don't have to argue my position that, you know, markets work and statism doesn't. The history of economics is clear on this matter. And so we will enjoy watching them do this. This again will just be, you know, the thing that I have pointed out that I take away from this is that we have a cohort of people, young people, that are being excluded, kind of like Steve Bannon said, I agree with him, being excluded from participating in the economy. They are almost like Russian serfs. Now, a lot of the boomers, I've listened to a lot of boomers, people that are wealthy, giving all these excuses. Okay, I understand, but there's no reason why if you are in over your head on student debt, you can't declare bankruptcy. That's just easy to fix these things. Okay, and it'll put punishment back on the system, but this goes back to government. Most of the people that went to college shouldn't even have went to college. They have no business. They don't have the ability to study. So we've lowered standards. You give grants, you give loans. Where's the incentives? People respond to incentives. Hey, all grants, government grants, because everybody had to go to college, right? And so they don't get engineering degrees because most people can't do the math. Okay. They don't become doctors because they don't have the intellect to do it or the drive to do it. And so they get some podunk degree and then it doesn't work out for them. Yet they're saddled with 80 or $100,000 in debt. Okay. So the system doesn't work. So of course people are reacting against this. Okay. And so the solution is, well, let's try failed policies. Well, of course they're going to vote for that because the current what's being offered to them isn't working. And so I've warned about this. You're going to have swings back and forth between left-wing populism and right-wing populism, but problems are not solved. And so, as Ayn Rand said, I'm not a devotee of hers, but I do like this particular statement when she was asked about the poor. Well, what about the poor? She had a system of, uh, individualism. What about the poor? And she answered, don't be one of them. So you got to figure a way not to do that. This is what actionable intelligence is about. If you are not staying ahead, you are going to fall behind. And they're not going to fix it by using policies from 180, 100 years ago that didn't work in the Soviet Union. Even look at China, ruled by the People's Congress, the Communist Party of China. I put this, and yet they're killing us economically. Okay, killing us. And so here we are, we're going to swing back and forth between these different ideologies, and nothing's going to get solved. And so how are you going to raise taxes in New York? The legislature there, I mean, this governor, Kathy Hochul, or however you pronounce her name, she's got to run a couple years for governor again. She wants to still be governor. Not going to raise taxes. If she does, she's putting herself at risk because the state's already the worst ranked state, the lowest ranked on tax competitiveness. New Jersey and New York. There you go. Look at the states that are on here. Okay. They're bleeding out, and people say, well, that's not true. Well, New York, New Jersey, California, the bottom three have net, California and New York at least have net migration out. And so this is what you're going to see. People don't want to, they don't get it. So we'll see what happens. It'll be interesting to see. I don't think, people are all worried. Oh, he's going to do this. He's not going to do anything. It's a $112 billion budget in the city of New York. There are so many entrenched interests there in the unions, in the different committees and boroughs and the mafia and business people. And you think you're just going to go in there and upset all that because people voted for you? I think it was somebody said once, if voting mattered, they would outlaw it. That's not how things work in the real world. Maybe let him tinker around the edges here and there and do a couple of his pet projects. It'll be Bill de Blasio 2.0. And then people will be disappointed and disenchanted. And this guy will probably then run for governor at some point. He'll be about 40. He'll run for governor and do a stint as governor. That's his plan, and then run for president. That's what this guy's about. He's not about, here we go. We have envy and political, uh, greed, wanting to move up the political ladder, being camouflaged as empathy. Okay. These people don't want to help anybody. This guy wants to be mayor, so it's a stepping stone to become governor or some other, senator, who knows what. Okay. And get to a higher level of politics. Nothing's going to change there because the policies don't work. You already know that. I think it's interesting this they're on this big climate change thing. Or somebody wrote an article. It was Francis Menton, Manhattan conservative. His daughter wrote an article about the electrification of the heating systems. I think by 2030, you have to electrify all these heating systems. It would cost like $60 billion. And completely, people don't have the money that live in these condos, townhomes, co-ops. They don't have the money individually to do this. City isn't going to pay for it. And so they just legislate these things. And so now what's going to happen to the prices of those homes? People can't even sell and move to Florida now if they want to. Well, who's going to buy it? And then, no one's going to buy a overpriced co-op or condo and then be saddled with, tens of thousands of dollars in costs to electrify the boiler in the basement from gas or heating oil. It's stupid. Okay. So again, all these things seem really good when you're running for office. People promise the moon. We know this, but it never gets delivered. And you're going to raise taxes now at the states with the least competitive tax state. Maybe they'll do it. I don't know. More people will leave. You're already seeing Goldman Sachs. You have the Texas Stock Exchange now. All this stuff's just going to move out of the state. And they say, no, it will never happen. It won't. Well, that's being naive. Now, eventually, I think the plan is to just have this at the federal level. They'll just take over everything eventually because voting, that's what you're going to get. When I show you the demographics, that's the whole point of the immigration, to get as many low IQ third worlders in here because they overwhelmingly vote for these policies. And then when you have basically the whole United States as California, then you can't move. So people should keep that in mind. That's, but of course I'm racist. I'm bigoted for saying that. It's a conspiracy theory. Okay. So we've seen this. Americans' view of capitalism have slipped. See this here. This is because it's not delivering. We don't have capitalism. I admit that. We don't have capitalism here. We have cronyism. We have a crony capitalism. We have an oligarchy. Okay. We've had that for a long, long time in this country. Okay. And that needs to be disassembled. Okay. Uh, good luck. You're not going to vote these people out. And, this is how the politics in this country works. I'm not saying it's right or wrong. You give money, politicians do what you want. You can walk around with a piece of cardboard stapled to a stick. No one cares about that. And again, if elections mattered, they would outlaw them. Yes, you'll be able to do some things around the edges socially or whatever, you know, run your mouth about all this stuff. But in the end, when it comes down to economics, you know, you have an oligarchy that's in charge. Okay. And unless you're going to basically confiscate their wealth in a communist system, like kulaks, like the Bolsheviks did with the kulaks, which I think probably may be inevitable, but not in his administration in the next 4 years. It's not going to happen. But this is what's happening because the younger people don't feel, and they're voting now, don't feel like this so-called capitalism we have, this system that's currently in place, is delivering for them. And one of the reasons is right here. One of the reasons younger people are swinging left. Median age of first-time home buyers in the U.S. It just keeps going up. This is ever since the pandemic, or it's even before that. Okay, basically since the pandemic. Inflation caused by the government giving free money out, setting an expectation. Once you give people free stuff, they don't want to have it cut off or give it back. Then to pay for it, we don't have the money, so they printed a bunch of money. But the productive capacity of the country wasn't able to absorb all that money, so prices went up in real estate, okay, assets. Remember, I talked about this in the newsletter, the Cantillon effect. Whoever is closest to the printing press benefits. You must be an asset owner. I keep saying this, but keep voting for Mamdani. He'll fix it for you. You have to stay ahead of these people, okay? You have to outthink. You have to look at things for the way they are, not how you, yes, in a perfect world, I would wish everybody would, all their dreams would come true, but this isn't how things really work in the real world. Now, people will say that's cynical or we can change it. When are you going to change it? The boomers that are standing out there with their walkers, they've been trying to change everything since the 60s. What's going to happen? People just become disillusioned. But this is going to be a problem because this is why you're going to see the swing back and forth between right wing and left wing populism. And the plan is when the leftists are in power is to bring in a third world cohort of low IQ people and have them be a permanent underclass that votes for them. And then they got the thing sewn up. That's the idea. That's it. And how do I know this? Because this is what it shows. Young women and people of color propelled Mamdani for young people. So you look at the young women vote, right? 84% for Mamdani. Look at Black and Latino youth, 84 and 86. There you go. So, that's it. And I think that we're going to see more of this because this administration, this government, this system is not responding. You know, no one cares about foreign policy. People care about their economics. That's all nice that you got the Abraham Accords. People don't care about that when they can't buy a house, when they are living paycheck to paycheck or falling behind and having to get payday loans, when they see no prospects or future for themselves going forward. They don't care about the 9 wars you stopped. Um, we need to focus on economic issues and focus on fixing the country. That's America first, but we're not doing that because it's hard. You're going to have to, you have to go after the health insurance cartel, okay? The banking cartels, pharmaceutical industry. I don't know how Bobby Kennedy stands there as with the Pfizer executive in the room that should be in prison and Trump lauding this guy and Bobby Kennedy just sits in the background. You can't be half pregnant. We see this all the time. People compromise themselves because they think, well, I can get something done in this system. No, I don't agree with that. Call it out for what it is. Tulsi Gabbard. Okay. She's covering all this stuff. Where are the prosecutions? There's not going to be any. Okay. Health insurance is getting out of control, is out of control in this country. Okay. All these executive orders that the president has signed, and he signed a lot, they're all going to be reversed when Newsom becomes president in 2028. Wait till 2026. If people need to wake up, what's going to happen when the Congress gets a 30 or 40 seat swing towards the Democrats? We're going to be right back to where we were in the first Trump administration. And none of these so-called Republicans, they're not codifying anything. Get rid of the filibuster and pass all of the Trump's laws, codify everything in law, but they won't do it. It's easy to go around and bomb brown people around the world that can't fight back and then dance around, call yourself this big, powerful guy. But it's really dangerous for your presidency and for your life. We found out from Mr. Kennedy and other people when you take on the entrenched interests. Okay. It's easier just to go along to get along. Talking about these young women who are the most insufferable. I mean, you see them on the TikTok videos. This is what Orwell said about them. I mean, there's nothing new under the sun. This stuff just keeps repeating. People are the same. Again, we have empathy or envy masquerading as empathy. Nothing new under the sun, I say. It was always from 1984. It was always the women, and above all, the young ones who were the most bigoted adherents of the party, the swallowers of the slogans, the amateur spies and nosers out of unorthodoxy. Yep, that's what we see. You'll see more of this. So let's be positive. Let's talk about some good things. Let's talk about Argentina's Vaca Muerta oil and gas bounty, which is coming into view, something I talked about. This is another thing, the media, we gave a 40, people are struggling in the U.S., but we gave a $40 billion bailout to Argentina. We didn't bail them out. It was a currency swap. People don't even know what the heck they're talking about half the time. But that's just found humorous. We didn't give them 40 billion. Just printed up $40 billion and took $40 billion worth of pesos. That's all. But anyways, I've said all along that I felt like the oil and gas and mineral wealth of Argentina, if it was allowed to be exploited properly, would be a very, very big spur to helping fix the uh, economy in Argentina, one that was saddled with decades, over 50 to 60, 70 years of left-wing nonsense. And so obviously this bonanza they discovered is starting to bear fruit. So this is basically September 24. This is your export and import of energy into Argentina in billions of dollars, $7 billion in exports last year against three. You basically had a net of 3.7. And then September this year, you had $8.1 billion in exports and less than. So the country is becoming more and more as production increases of oil and gas and more pipelines are being put in because there's a lot of infrastructure that needed to happen. You're starting to be able to see, a pipeline being built to the coast. That'll be a 500,000 barrels a day that'll be able to export. The gas reserves are being tied into the Bolivian gas system and into Brazil. And so the country is becoming a larger and larger exporter of energy. This is very important. Why? Because energy is everything. And if you're exporting more than you're importing of energy, you're getting this is all in dollars, you're getting more dollars. Remember what I said, that one of the big things that helped the Thatcher regime in the UK be so successful was that she got elected right when the UK North Sea kind of started blooming. It wasn't the only reason, but it did help. And the same things I think is going to help here in Argentina. And we can look at a forecast by Goldman Sachs. You can see the energy balance here in 2024, 2025. These are the Goldman Sachs forecast and the Central Bank of Argentina's forecast. And you can see through the end of the decade how their energy trade balance is going to soar over the next 5 years, up to at least Goldman Sachs says to over $20 billion a year surplus by 2030. So this is very important. This won't be the only thing. But the recent elections there in their representative in their parliament were very positive. Now, I've got whipsawed by Argentinian politics. And I've been wrong. I didn't think Milei would make it through. He did. I sold my stocks early during his election. I kind of got whipsawed on that. And then I kind of had a holding um, of the largest cement company in Argentina, and I sold that. That thing drifted lower because everybody thought that after the Buenos Aires elections prior to the recent parliamentary elections, Milei didn't do well, but that was in a traditionally Peronist area, and then he over performed in the recent parliamentary elections, and the Argentinian stock soared. So I think you just need to look at things overall. I think he's going to have to compromise a little bit more with some of the center parties, and I think this could be a net benefit. And so I'm not saying rush back in and buy Argentinian stocks. They rallied very hard already on the prospects, but I think that if this takes hold in this energy situation, and of course, I think that energy prices are going to be going a lot higher over the next 3, 5, 10 years. This is going to be a very big boon for Argentina. And it's not just oil and gas, they have a tremendous mineral endowment also. This is why we're so interested, the Trump administration is so interested in Argentina. It's part of the Donroe or the New Monroe Doctrine, if you will, of focusing on the Western Hemisphere. And so you're going to see more of this type of stuff, not less of it. Okay, because if you remember that before Milei got elected, Argentina was petitioning to join the BRICS nations, and that would have been an entry for China and other U.S. competitors to get the benefit of this bounty, not necessarily the uh, Western hemispheric Atlanticist hegemon. And so that's what I think is really going on. But most people don't see that; they just see other things. So, but I think this is worth watching. And if we get maybe a pullback in, it's worth watching what happens in Argentina with the economy because it's still, even though the market there has moved a lot and there has been some big moves, this should be illustrative of what can happen when things go from terrible and bad to less terrible, okay, and moving towards even the good. It results in a tremendous revaluation in stock markets. And so this is the next thing. It's next week, I believe. Yes. Next Sunday is the presidential election in Chile. Right now, this is the poly market prediction market. It's not guaranteed, but right now it's showing that the right-wing candidate, Jose Antonio Cost, at least on this prediction market, is 71% chance of winning the election. He had a recent dip there when everybody thought that, we're having this whole big movement from left to right in Latin America, with the recent elections in Bolivia, and now what's happening in Argentina, forecasting what's going to happen in Chile, and hopefully other places like Colombia and places like that. So um, this is what I've been forecasting. I've told people to, focus on Chilean stocks. We have a holding in the portfolio, Actionable Intelligence Alert. A lot of the Chilean stocks are already moving in anticipation. You can't wait until these things happen. This is the lesson. This is what goes back to what Druckenmiller said about you can't base your investment decisions on what's happening today or what just happened. You have to look out 18, 24 months and forecast what's going to happen. And so the bet is you get a shift from the current left-wing government to a right-wing government, and it'll become more market friendly. This is why capital's coming in anticipation of that happening. You can't wait till it's verified because a lot of the move is already happening. Okay. The same thing when we're going to talk about, I know there's one guy or a couple guys that come to the comments. This guy just talks about the same thing every week because I'm beating the drum, like on oil stocks. You can't wait until the consensus view on Wall Street and the media is that, oh, OPEC was the OPEC quota, rescinding the quotas isn't really having an effect. And oh, by the way, the Permian isn't rolling over. or peaking. You can't wait till everybody realizes that because everything moves in anticipation of that. Before that, smart money. You have to anticipate out in the future. You can't just be the herd running. The move already happens. So I'm very bullish on Latin American stocks. I've talked about it over and over. Um, I think that they do well when we have big moves in the commodity index because a lot of them are commodity focused economies. You see that the stocks in Latin America are moving already. Commodities really haven't. They're starting to break out across the board, different areas. But this to me is a leading indicator telling me that the stocks are anticipating the move in commodities. That's how I interpret this. And of course, we do have a technical breakout in the iShares Latin America fund. This is, going back. Basically, we had this consolidation into this uh, wedge, and then we've broken out to the upside. We'll see if it holds. But again, I think it's illustrative of the political change that we're seeing in Latin America, the shift from state, they had a Bolivarian Elo uh, Evo Morales in Bolivia for over 20 years. People had enough. Okay. The same thing in Argentina. You had Peronism for decades. People had enough. After 250% inflation, you finally are ready. This is an example of things swinging back and forth because it's, yes, people want free stuff, but even with the free stuff, you couldn't keep up anymore. Okay. And people just saw this isn't going to work. This isn't working. And so people are desperate for when the wheels completely fall off, they are desperate for any change. And so what I think is happening in the rest of Latin America, people are looking at these countries and saying, wait a minute, we have these left-wing policies here. They don't work. These other countries are shifting. Their markets are improving. Maybe we should consider that. That's kind of how I think this whole shift is happening politically in Latin America, and I think um, it's going to be very lucrative for the markets there. Same thing in emerging markets. Now we've had this is getting ready to break out. I think maybe not. We'll have to watch it, but same thing. I want to go where technology economic policy, demographics, and commodities intersect. This is why I have a friend that runs the Uzbek fund. He calls it the new Fertile Crescent throughout Central Asia, from Turkey, from the Bosphorus through Iran, Central Asia, into China, the new Fertile Crescent. I agree with him. People are sleeping on this stuff. There's tremendous opportunity there. I like the Republic of Georgia that's on the Black Sea. They've had tremendous change in economic policy pro-market. The country was one of only two countries, basically Georgia, the Republic of Georgia and Uzbekistan, that actually had positive economic growth through COVID. So that should tell you something. Okay. So again, I go back to what I said before. The economic history is unequivocal in the fact that if you put policies in effect that are pro-market, you have prosperity. If you put statist policies in effect, you get your little power. You get to become, king or mayor or governor, but they don't work. And then people will leave if they can. If they can, they will leave. They will take their capital elsewhere. We've seen it over and over and over again. And so a lot of the emerging markets are enacting policies that are conducive to economic growth. And therefore, or they have lower debt or they have positive demographics. This is what I'm looking for. Why do I want to be? Yes, there's still opportunities in the United States. Yes, there's still opportunities in certain parts of Europe, but this isn't where I'm putting the majority of my capital over time. Oil services making multi-month highs versus the S&P. This should be telling you something. I think starting to bottom here. If you look at, again, I've talked about this before. A lot of people just look at the drillers, but even the drillers, if you look at their recent conference calls, they were all pretty positive in my mind. And again, we've already been making money in a lot of the other oil services sectors outside of drilling. We've had those in our portfolio and they've done very well. And I believe they'll continue to do well. we're going to have a sustained bull market in oil services because oil is going to go substantially higher, in my view. And we've had tremendous underinvestment for years. Rick Rule has been quoted several times as saying that he thinks that the deficit in spending for new reserve uh, capital spending in the oil sector is $2 billion a day. I don't disagree with that. So I got this off of Twitter from Shy Girl. This is the OPEC plus revised quota and actual production. Just because they revise the quotas upwards doesn't mean they're actually producing that. See, the market, I don't think, has fixated on it. They just fixate on the headline, which is OPEC is pulling back the quotas or rescinding the quotas and allowing more production. But the production's not really, matching what they said. So you have, you know, this is a revised quota. We're here November 2025 is 33 million barrels a day, but we're still under 30 million barrels of actual production. Now, maybe they'll get up there. I don't know. But this is one of the negative factors that supposedly, I saw the IEA say that they thought there would be a 4 million barrel per day overproduction on the world market. That would be like what happened during the pandemic. I don't see that happening. I don't see that happening. But that's what a lot of the market is fixating on. The market's fixating on the fact that, oh, Permian growth isn't pulling back. But then we saw the October results came out from the data. And in fact, oil production in Permian dropped, or U.S. oil production dropped again. It had been moving higher over the last couple of months and then dropped, fairly substantially. So you can't just go month to month. You've got to look out over a period of time because these things do move around and they are a little bit volatile, but what's the actual trend? And so it's worth watching. I think that the consensus view around we're going to have this global recession. We're going to OPEC's overproducing into this global recession, which is they're producing too much oil into um, a lower demand scenario or low growth or no growth oil scenario, and continued production gains in U.S. shale are going to limit the growth of the oil price. I don't agree with that. The market, I think, is going to shift its view on that into the first quarter of 2026. Maybe I'm wrong. I don't know. We'll see. I don't. People say, well, I mean, I don't know how you're going to have a worldwide recession when the majority of central banks around the world have been in a rate cutting cycle for the last 2 years and continue to cut rates. Now the U.S. has joined that party. I don't know how you're going to have. You may have already had your recession here in the U.S. We're not going to know. So we'll see. I think what I wrote in the November issue of the Actionable Intelligence Alert newsletter is I think that um, global growth is the contrarian bet for next year. I think we're already seeing that. So yes, you can go around and find individual data points, and not saying that the U.S. isn't kind of struggling right now, but I think that with the lower rates, more liquidity, the fiscal spending that's going on, and now I think this trade thing is kind of backing off a little bit. Um, we could see a big, move higher in the economy. And I listened to an interesting interview um, where an economist was making an argument, he used to be a Federal Reserve economist, making the argument that the government data is not really, there's a lot of entrepreneurs, kind of like myself. Okay. I don't really have a W-2 job, but I do have a substantial income just from doing videos and writing my newsletter. Okay. I'm a one-man band, my own business, and I've built up over the last 10 years, and now it's pretty fruitful. And more people are doing this. They're finding their niches, whether consultants, creators, whatever they're doing. And there's a substantial amount of people that aren't being captured properly in the labor force. Okay. And I think that that's another thing. But that's another discussion. So I think the consensus is wrong on this. We'll see. But until I see people starting to raise rates, because I think what's going to be the limiting factor for global growth will be the rise in energy prices. I believe energy prices will begin to rise as we start reaching the limits of OPEC spare capacity, and the realization sets in that U.S. shale has at least plateaued, if not gone into decline. And then obviously, in order to have continued economic growth, you need more energy, because energy is, the economy. And then the price will rise. And at some point, the price will get to a sufficient point, which will throttle growth, start causing inflation, and then central banks will have to reverse. But I think we're a ways away from that. I think things are going to surprise next year. Obviously, the IEA, I even wrote that in the article. You could read the free part of the article of the Actionable Intelligence Alert newsletter November issue on Substack, where the International Monetary Fund is raising growth prospects around the world, and yet somehow oil is going to go to 40. I don't know. We'll see. I could be wrong. But again, the underinvestment coupled with continuous, relentless depletion and growth of oil demand in the emerging markets and the S curves, that's, you know, when you get to a certain point of per capita GDP, where, like, for example, where India is now is kind of where China was in 2004. And so you're going to see substantial demand. That doesn't even account for a place like Africa with over 1 billion people, many of which haven't even flipped a light switch yet. So the demand for energy is relentless, and the investment has not been there. Uh, Ergo, I expect higher energy prices over this decade, which should be lucrative for us as investors. So I just want to throw this in here. Cameco had its earnings call. I'm not going to go through it. I used to go through and dissect it. You can do that on your own. But I just wanted to point this out. I thought it was an interesting chart. This goes back to the first quarter of 2019, and you can see what's happened here. This is the spot market price in orange, above 80 now. The term market, basically above 80. And you see Cameco's average selling price has slowly been creeping up. As contracts roll off, older contracts, the new contracts roll on. This is why I'm bullish on Cameco. They have some, I think with the tremendous, I've talked about this before, the Westinghouse acquisition is going to work out, I think, very well for them. But we'll see. But this is interesting. I suggest you read their report. Again, I wouldn't go out and buy the stock on Monday. It's kind of overvalued right now. It went straight up over the last month or so. Uh, Probably needs to digest those gains over a period of time. But I just thought this was interesting. And last, I wanted to point this out. This is a chart showing global orbital launches 2000 to 2025 projected. And of course, you have China in red, who has been increasing over time. US except SpaceX, which is down here, this little gray, and the rest of the world in green. And then you have SpaceX. And basically, I said here, if it wasn't for SpaceX, China would lead in launches. And so, fostering entrepreneurialism. It's interesting. SpaceX has moved a lot of their activities here. I remember when I first moved down here to the Rio Grande Valley, there was just a construction trail out there where the launch facility is, at spaceport or whatever they call it now. Um, there was only a construction trailer and like dirt out there. And now they have multiple big buildings like you see at Cape Canaveral, where they assemble rockets, the launch pads they have out there. They're building housing. They're going to build a school. Thousands of people are moving down here and working here now. That's because I think that Texas has put into place the has the policies, economic policies that are drawing. Now, obviously, the Boca Chica place down there is conducive to launching out over the Gulf of America, whatever they're calling it now. But again, it's like Elon Musk. I think they moved the headquarters of Tesla and SpaceX out of California. because these places are not conducive to economic growth. People respond, and you can find example after example. People aren't saying, you know what? I think that I'm going to move my headquarters of my company from Nashville, Tennessee, or from, Tampa, Florida to Los Angeles because I want higher costs for my employees. I want more regulation in my company and my business. I want, a higher cost of living, higher cost of doing business, and over-regulation. No one says that. So again, um, we'll see what happens, but maybe this was not entertaining for you or illustrative for you, but if you put policies in effect, that's what we look around the world for. Where are the policies being market friendly? Because market friendly, the overwhelming evidence is if you put market friendly policies in place, the markets do well. People flourish. Consequently, stocks have a tendency to go up. It's really not that hard. Okay, guys, that's it for this week. We'll talk to you next week. Again, Actionable Intelligence Alert on Substack. Take a look at it. We are crushing the S&P. Uh, if you want to be an active investor, we can show you how to do better than just putting your money into a low-cost S&P fund, uh, because being an active investor is actually quite difficult. Most active investors underperform the market and they don't understand why. We help to try to fix that and show you why and how to be a proactive investor to take charge of uh, your funds and your investing and help you have success. All right, guys, that's it for this week. We'll talk to you next week. Thanks.